Hello and welcome to the Stock Planner channel. This is the second part of how to trade and make $50 to $100 every month with one or two trades, one or two stocks, and do it very easily and do it while you're learning. The Stock Planner channel is an education channel. We're not advisors. We learn from each other, and my advice to you is never take advice from anybody on the internet. I hope this helps. Especially I hope it helps beginner traders. Now, in part one of the video of how to make money, how to make $50 to $100 a month swing trading, we covered three stocks: Fiverr, Caterpillar, and Home Depot. We're looking at Fiverr, and we're looking at a trading view chart, and we're in the daily time frame, and we said that a swing trader tries to capture these swings, and you can make some serious bank if you do that. This is the zigzag indicator, but you can't use it because it's a perfect indicator and it looks to the future. We don't have that ability, especially sitting right here. We can't look at and by the way, this zigzag doesn't know what it's doing in the last few bars for Fiverr. It's just what happened with this stock is it went down and gapped down and it's been hanging down there ever since. But I have to use other indicators to capture these major swings. And that is the MACD, zero lag MACD. And when it's seriously above the zero, but the rule is above the zero, I like it serious. When the RSI, the stochastic RSI, is above the 80 and comes around, and when the RSI set at 4, is above the 70 and comes back around, it's the opposite for a short. I back tested it, and my reliability for this particular stock, using this indicators, using when all three occur about the same time, is about 72 to 74%. 74%. And this is over a 3 or 4 year period, January of 2018, and that's my net profit, 74% win rate, 31 trades over that period of time. You notice that not all of my stocks have a win rate of that high, but a lot of people trade with win rates of only 50%, as long as they have a good risk-reward ratio. Anyway, I think I'm going to take this trade, currently at 171. If I have a small account trading at about $1,000 each trade that I make, that's going to let me to do and purchase 5 shares of Fiverr. And if I think it's going to go up to say 200, which I do, that's $30 for 5 shares, $30 increase for 5 shares, about $150. But it's going to cost me about $1,000 to $1,200 to do this trade. $1,000 to $1,200 to do this trade. Is there a better way? Let's take a look. Looking at option strat and typing in Fiverr, it's trading at 171, so we want to make sure whatever we do, it's going to move. Now, we do think it's going to move to 200, and I use to make, we think it's going to go up, so we say use a bull put spread. Please look online to what a bull put spread is, but basically is that it's saying it's going to go above, if anything, at the end of expiration, by it's the 17th of September, if it's above 170, you win. You win this. Okay, so right now they're using $2,500 a margin. That's too much. Let's do 165.70. So now we're only using 500 margin, and I want to be a little further out. October 15th, and see what September 17th again. 240. So I'm going to take a little more time. It's only $10. I mean, it's not. So in this case, my max loss is 250, and my credit's 250. This is a 1-for-1 trade, and it gives me a whole lot of room to win. Now, as long as this stock stays above 167, currently at 171, I'm going to win something. Now, when we did our back test in part 1, most of our trades ended after 10 days. So let's see what 10 days is from the day. 10 plus 116, or 16, is 26, 27, somewhere in here. And we think it's going to get the 200 by October. But if it goes just a little up, say to 185, we could get out at 75. 75, we get out at 185. And remember, when we bought the stock, we had to get out at 200. So you can get out less, for a little less, but with only a $500 investment, this is about 8% profit in about 10 to 12, 15 days. That's sweet trading. That's if it goes our way. If it doesn't go our way, and it goes down, you can get out in 10 days around the same amount. So if you remember 167.50. So if it stays above 167.50 by October, we win the whole enchilada, which is, if we recall, that's about $250. And if we can take our profit earlier, about $85, if it gets to 185, which is right about here, in the next 10 days. Both of those are good chances. And we have a lot less invested. So I use options a lot. And I look to escape after 10 or 12 days if I can. I stay in longer if I think things are going my way or went my way early to see what happens. But if things are not going out my way, I take the loss, move on. Okay, because I know that I'm going to win about 70% and lose about 30%. You can't win them all. Cat, we have the MACD above 0. The stochastic RSI is coming around the bend, above the 80 and coming back around. And the RSI is coming back around. We have a short single on this stock, Caterpillar. If you were to buy it with a small account, you could buy 4 shares, currently trading at 218, and short 4 shares, and buy it down here. And I believe it's going to come down somewhere in there, that area there of about 225, 50% retracement right there, if it's coming down. My indicators said it is, and we trust our system. Caterpillar, this time we want to go short, so that's going to be a bear call spread. These are credit spreads. Lots of information out there. Let's go out to October 1st. And right now, they want us to put up $2,500 a margin, and we only want to trade it with $1,000 each time. So it is currently trading at 218. Let's move this one, short strike, to 215. So it has to come down to 215. $500 a margin. This is about a 1-for-1, and it needs to be below 217. I think it's going down there. It's not quite there yet. And if it is, there's 217, we're going to win something. Now, 10 days out from the day is around in here, and we want it to go down a little bit, and there we can get our 60, 30, 60, 75, somewhere in this area here. Or we could lose that in 10 days if it doesn't go our way. So, again, this is a short trade. Got to be below 217, right about here. And if it is below, somewhere in here, we get about 78 bucks. Again, that's about a 7 or 8% profit on a $500 investment, risking about 250 bucks. I like it. And the last one, even though Zigzag does not know what it's doing, the MACD is too close to the 0. The stochastic RSI right in the middle. We like it to be above or below in our overbought, oversold condition. And likewise, the RSI is right square in the middle. We like it to be overbought or oversold. There's no trade here, but you could do the same thing because this is a very expensive stock. You could use options and put up about $500 and trade this. But the problem is, to do options and option spreads, you need to have a margin account, and I think you need to have around $5,000 in it. But really, all you're required to have is $2,000, and you probably need a little more, so $2,500. You could do these kind of things on a small basis, 1 or 2 at a time. I think you'd enjoy them. Bull put spreads and bear call spreads are bread and butter credit spreads. They're easy to do, easy to understand, plenty of information out there. You'll love it. And sometimes it beats buying the stock. Now, I do buy the stocks and short the stocks. It depends. But these days, I want to enter defined risk trades for small amounts of money in case the market crashes. Anyway, that's a trade. Please like and subscribe, and catch you on the flip. Second part of making some money, at least $50 to $100 every month, extra without a lot of work. And you can do a few of these while you're learning it. Do your own due diligence. Again, like and subscribe, and catch you on the flip. Happy trading.